I'm late a little bit, so I'm going to mark some important key levels. First thing I'm going to mark is the opening range, previous day high. So the first thing I'm going to mark is the previous day high and the previous day low on the regular trading hours. We are gapping above the prior day high that, and we are gapping above the monthly volume imbalance. So coming to the weekly time frame. Okay. Let's get back to the 5 minutes. See where we are. We are far above the moving average. The first bar, let's see how the first bar is going to close. We gapped above the prior day high. Let me just give me 2 minutes. I'm going to mark some important levels. Four 36, 436, 328, 328. So overall, this range is very important. This range is important. Price will, as long as we are above this box, I'm not interested in taking a short at all. So if I do some close analysis for from 4 hours to, okay, I'm not interested in taking a short, as you already know from yesterday. This was my buying zone, so I got 1 to 14 risk to reward ratio. My risk on this trade was 28 points, and I got 419 points out of this trade. So that was really, really good. So now that is done, right? But why was I aiming for this point? I was aiming for this point because we have a single standard deviation of this leg, this whole big leg around this point. That is 558. So we haven't even touched the half of this leg. So this is a very high probability that we are going to touch this point. Okay. So a single standard deviation of this leg takes us back to complete standard deviation, or not the 50. This is the 50%. This is the complete standard deviation. Will take us back up to 827. 800. So I'm not interested in taking a short on 4 hours. Let's see what's going on the hourly. Still, hourly, we have 15 minutes. This might be more of a buy the close bar than sell the close bar. So because this was the first down close after one, two, three or four bull bars, right? We have 25 minutes till the first hour is going to close. This hour is going to close. So we will potentially be close above this high. I'm going to use this as a reference point for now. Let's see where it equals to on the 4 hours. 4 hours, right? Coming back to 15 minutes. 15 minutes is what would be ideal on 15 minutes if we get a closing above this point or any of the prior bar. So overall, we are in a trading range. The first bar is not a strong close bar. It's basically a doji bar. First 5 minutes closed. We have previous week high and this level, which is 574. 574 is that point where we never took out the first candle of the day. That was the first 5 minutes on 31st of July. That can be a good potential target. But as of now, I am trying to take a scalp from the initial range setup. 4 minutes, 3 minutes. We have a lot of wicks from 8 o'clock because on the hourly, it is more of a trading range. We closed above, we closed below. So this is the price, this is the candle which is holding price, the 7 o'clock candle. I'm looking how this will close. This 21 minutes will close. So depending on how the 21 minutes will close, if it closes above this high, that can probably break this hourly range into a trending market, taking us back up to 557. Second bar is about to close. If we keep on going like this, we can just take out the previous week high. That's very probable on this session. This session, yeah. Last bar of the 15 minutes. It's running without me. That's not good. Second 5 minutes is a strong, not really strong, but it closed above at its high, so it's relatively strong. 4 minutes till the first initial range will complete. If you get a closing above any of these prior bars, so it will make it more highly probable that we will get this scalp. Bulls record the first close or this close, bring the stop loss half times the risk, one times the risk. Let's see if this bar is disappointing or not. 2 minutes. This is quite a disappointment. Let's see how this bar is going to break. But still, this is not what I need or want. This is something which is indicating that it's not gonna go anywhere. The range of this 15 minutes is 60 points. If I take a trade, I'll be aiming for 30 points. 30 points, yes, it can come back here. Or if it breaks towards the upside, upside is bad. Risk reward not good. Not really ideal risk reward. If I take a short, which is a good risk reward, that's counter trend. First leg, second leg trap. 15 minutes closed. Let's say on the smaller time frame, how the price will react and close around this point. It's it's quite dangerous to take a short. I don't want to take this short. Not interested in taking a short. But still I'll try. This is a quite a dangerous short. This is not good. This is bad. I don't want to take this short. 569. aiming for 30 points. If it closes again within this range, I am not interested then. If it closes back within the range, I am not interested. I'll take a loss. It's okay. Above this prior buyer high. This is a very dangerous point. If I'm shorting it right here, it can just bounce around from this point. I know, because this area is somewhat of a buy zone. So took out some lows. But still, I'm sticking to the plan. I I'll close once we move or close above this bar. It's taking too long. It should not take this much long. It's a breakout point. It's a breakout mode. Can break towards any side. Inside candle. It's an indication of a range. Okay. Okay, I'm taking an L, closing this trade minus 13 points. I don't like this for a reason. This is somewhat of a buying zone. Now, if you close above this high, then I can take a long. I think that was a nice trade, bro. That was really nice trade. 1 to 14 risk to reward ratio is really very, very rare. The best thing is I knew the probability was really high on that specific trade. So 950 candle is imbalanced for 5 minutes. So we closed above a bull bar. We have got two bull bars, two bear bars. And let's say we close now on a 1 minute. 949 candle is imbalanced. 50 candle is itself is imbalanced. So first bar was a doji. The fourth bar is also a doji. Okay. So from the start, two legs up, two legs down. This is a trading range. This is a trading range and has been a trading range for 2 hours now. If I go to the hourly time frame, this is what I'm basically referring to as a trading range. Closed above, we closed below. some sort of an doji candle, took out the low of the doji. Okay, if we close above this prior bar high within the next 8 minutes, that is an indication that we might continue our trend towards the upside on the hourly. On the hourly, it's a problem, but on a 4 hours, it's nothing. Okay, so it's on a 4 hours, the trend is still intact. It might chop around within this candle's range, the 5 a.m. candles range on the 4 hours range, right? Then continue. Okay, so 4 hours is still intact. It will be intact. When will it become a problem? If the price moves below this low and close below on the 4 hours, then that's some sort of problem. Okay, 4 hours done, hourly done, 15 minutes. Back to 15 minutes. On a 15 minutes, this is what is holding price. Same as hourly. A doji candle, inside, doji candle, outside bar, a doji candle. So it's an indication of a range. I am not forcing trades today. If I get a good trade, I'll take long. Thank you, Eric. Look at the size of this trade. Just check this out relative to the risk. What was the risk on this trade? It was 28 points. When I left the stream, right? I left the stream somewhere here. So it came very close to the stop, but these two lines were got support. Okay, okay, let's come back to where we were. I think we might get our setup outside doji bar and downside. 5 minutes left till this candle is going to close and the hourly candle is going to close. So, what is the reference for the hourly candle? This 505 is the reference. If the next 5 minutes close above, that means the hourly is closing above this 730 candle high. So hourly trend is agreeing with 4 hours and 15 minutes. So because on a 15 minutes it's got invalidated, got validated towards the upside. So it can be potentially. Plus we have taken out the lows. It can continue towards the upside. Short. We closed above. Again, we closed above. So it's more bullish than it's bearish. We never got a closing below any of this fixed low. So that's hopeful. If we close in the next 5 minutes above this 505 level, that can indicate that we are agreeing with other trends. And another thing that would be good if we clear this liquidity out, liquidity or the imbalance out, just wick through it, then move forward up. That's the best one. Like nice. Back. This is nice. I need a single close above. I need a single candle close above. I will buy it with a pending order, something pending order like this. Long position. I'm risking 33 points, 32 points. I need a closing here above this range. Closing is a good indication. Without closing, it can do something like this. Closing is something which validates this candle, and I do have a reference for invalidation. For example, if it closes above, then closes below this prior bar low, then I can get out without taking the full loss. It's nice. If it chops me now, then I am not interested in taking another trade. Go. I'll just I'll just not trade. Okay, first I lost 13 points. Now I am risking 30 more points. I got a previous trade right somewhere here somewhere here. I lost 30 points on the previous one. So I'm risking 32. Why am I more eager to go long? Because we haven't even completed the full standard deviation, half of the standard deviation of the initial leg on the higher time frame. Okay, the bulls who got this close, right, and bought more lower below this point, this they will get out probably somewhere here. No, that's half of their half position. This is the full standard deviation of this leg. Can it be that this is the first leg, this is the second leg trap, and we can come back down? If we come back down, that's going to be invalidating for the whole criteria, and I'll just not trade and because that is indication of a range. 2 minutes, 2 minutes, 2 minutes left. We can expect some sort of volatility. Within 2 minutes, either it's going to do something irrational. For example, within the 2 minutes, this is not going to be invalidating criteria because the hourly candle ATR is going to expand. So it can just come back down, chopping me out, then go. So it's 50-50. 50 not basically 60-60, 60-40. Because the bigger clock is turning on the hourly time frame, the hour is going to close, hourly candle. So it's going to use its own ATR reference. Then the validating criteria would be 3 or 4 bars prior to. Okay, if that makes any sense. This is not good. This is bad. Inside candle, it's hesitating now. If it do something irrational, I cannot do anything. I'm just letting it be. If it's obvious for me to close this trade, then I'll close the trade. Otherwise, I'll not mess with it. Because I'm not risking much. It's just 30 points and I'm risking 30 points for 30 points. If I start to tweak the system, the probability will also evolve. Took out this load, that's nice. Is it unreasonable for me to target 30 points? No, it's not unreasonable. The whole range of this is 60 points. I'm just targeting 30 points. It's not something unreasonable. Okay, I'm up 21 points. I'm just getting out. I know it was a bad risk to reward, but still, I'm getting out. I am good for the day. I've recovered the prior loss. Thank you so much. If someone's watching, I hope you learned something because I'm sharing my internal dialogue tick by tick. Okay, Eric, are you still watching? Who is watching, by the way? I'm very. Who is. Yeah. Yes. So, I hope you learned something, right? See, I got out. This was an inside candle. So this is a breakout mode and a triangle. The triangle apex of the triangle is revisited every single time. We're coming back. I've gotten out the trade. It was a nice trade.